So it's funny, I got one of my boys' coffee cups here. I'd rather be trading. Um, so when it comes to I'd rather be trading, of course, for me, it's I'd rather be trading real estate. My boys like the stocks, but that's okay. That's them. Um, Anyways, today's topic is going to be criteria for buying in 2023 right now. Uh, and this is the members meeting I have every Saturday or nearly every Saturday. It'd be 10 a.m. Central Time. So if you didn't get the email, make sure you get in there. Those of you that are in the mentorship. Um, so it's interesting. I had made several offers in the last 2 weeks, and I hadn't. It's been a big dry spell prior to that for me. I've been taking care of a lot of properties. I'm 100% occupied. And interesting enough, the last two vacancies I filled were with my existing tenants expanding into other buildings. In other words, it's funny, I've got two retail centers that both had a vacancy come up, and one of my tenants from each from each center, each retail center, strip center we call them, uh, took a new space in another center that are about 20 miles away. And so getting off topic a little bit, but that is one of the great things about real estate. And even my portfolio, I got about 185,000 square feet of rentals of retail and office and industrial, primarily retail. And it's really cool when you have good tenants that have been with you, and they're like, hey, let me know when you have something, and then you say, hey, I got something. They're going, okay, great, we're going to expand, we're going to make the move now. It's just because our success is shared, and some of my tenants I've had for over 20 years, and that's the kind of rapport you really want. In fact, some of my tenants, I might have one of my tenants, who knows, we do other cooperations possibly too sometimes, and I'm talking about potential partnerships. Some of my tenants, not only do they rent their business space from me, but they even rent their home space from me, which is, something I would have never anticipated happening 25 years ago. I wouldn't even have thought about it. Now it's kind of somewhat normal. But today, what I want to talk about is the criteria for making a deal. Right now, it's kind of the same. I mean, it never changes. Anybody that's in my mentorship knows we never pay full price. And that means based on whatever today's value is, if you can determine what today's values are, and they are going down, so you have to buy far enough below market that you have time to turn it around and still maintain that margin of profit. And of course, the big things that get in the way right now are money. The cost of money is very expensive, but it's the same formula. You're still got to buy under market, but where it gets complicated now is you're not going to have the same cap rate, or you're not going to have the same net operating income, because if you finance 75% of your deal at 7.5%, where a year ago you'd be financing the same deal at 4.5%, it becomes a problem. And now and everybody knows I like revolving lines of credit, and I've got several that I established before things started heading down. So I got all my mortgages fixed before they went up, so good shape there. And most of my students also did, so I'm really proud of the students, because they took my advice, but they bought right, and they got things fixed, and everybody got rid of what they wanted to get rid of before things started heading downhill. So it's always nice when you can, if you're 20% within the top, the peak, if you can sell within that 20% of the peak, you're doing a really good job. And everybody has. And just in this last week, in fact, might have closed today. I'll know today in the meeting, but I got one student. He's going to make $1 million, probably a little more maybe. Just closed a fantastic deal, or is about to. We'll find out if it's closed. But we're talking about a $20,000 retail center for $42 a foot. He killed it. And a couple months ago, I had another student that did almost as good, Probably somewhere between 800,000 and $1 million there. Equity day one. Already got it rented for 14,000 a month, and paid a fraction of what it was worth. But these are the things you start to feel naked when you're an active investor, and you always have something in escrow, and then all of a sudden you start to go through a dry spell. It almost you kind of feel like you're missing something, like you don't have your wallet on you. That's what it feels like to me. And then of course also I feel like, wait a minute, I should have something growing and making money for me. And I've been a compulsive, obsessive investor since I was 19 years old. So that's totally common for me. But even I have to fight the the instinct to want to get something, to have a deal, to have something to be building and fixing up sometimes, or revamping or raising the rents on and redoing the leases on. And I've got everything that I have maxed and taken care of. And then of course new problems will come your way, in as much as your property gets reassessed, your taxes go up, and then you got to fight the powers that be on your property taxes. And they sometimes they have a very unrealistic view of the value of your assets, and then your taxes go up, and so then you got to get a lawyer, and you go to court, or you go to arbitration, and you get things beat back down, and then you spend ten or $20,000 sometimes in order to recoup $40,000-$50,000 in taxes that you've been unfairly charged. So I'm having to deal with a lot of that stuff here the last 18 months. But anyhow, in the class we're going to kind of get into it. I'm going to show you guys some of the deals that I walked away from recently, or I should say I stuck to my guns as far as my offer, which some would call it a lowball. The people that I offered the money to, they would call it a lowball offer probably. But to be quite honest, some of them are just stuck because what they bought, what they anticipated selling for a year ago is no longer isn't relevant. It does what you want, what you could have sold it for, isn't relevant to what it's worth today. And a lot of people have a hard time facing that fact that, hey, it's not worth what it was a year ago because the money is too expensive. You can't sell something at a 6 cap and expect, and you just can't, because the money's too expensive. And even if you can pay cash for it, it doesn't matter. If you do settle for a 6 cap and you have all cash, you're kind of wasting your money. Which, hey, anybody out there that's got money that you want to loan money, millions of dollars, I'll borrow it from you. And it'll be well secured, and I'll give you a really nice return on your interest rate, and it'll be secured with a very good asset. So let's see, somebody wrote here, I'm in the title insurance, and we've been in a dry spell for almost 2 years. Yep. Housing slowed way down by us, and mortgages dried up. In the meantime, I got my real estate broker's license ready to go. Well, hey, listen, get my book and start learning how to invest in real estate. I've got a lot of real estate agents. I've got mortgage brokers. I've got, I got people that have been in the business for 30 years in one way or another in real estate, whether they've been on the loaning side of it or a broker side of it. You learn a lot. The money's in being an investor. It's the money's in being an investor. And if you go to FlipAnythingUSA.com, just look at the testimonials I've gotten, guys that are new millionaires in real estate, and it's a real happening thing. And a lot of you guys are really good at business and what you do, but you don't know enough about all the different aspects of real estate. And I'm talking about being an industrial landlord, being a apartment building landlord, being a retail, and I've done all that and do all that, and so I can kind of fast track you and get you where you might want to be, because a lot of people are changing gears right now. Like I said, the mortgages are slow. I mean, obviously you're in the title, you said title business, right? It's because right now there's no refis. Sometimes what saves everything is when they drop they drop the interest rate in bad times, and then everybody's got, oh good, the refis are saving us, and like a lot of times when you're in construction, a hailstorm comes and does $180 million worth of damage in your area, and you're like, oh thank God, it's like money falling from the sky when you're a contractor. I'm going there after this to get that book. Yeah, good for you. Is it Where 3? Yeah, you'd be glad you did. for those of you just got here, please hit that like button, hit that subscribe button. This is me kind of letting my students know as a reminder that I've got a live meeting we'll be doing in about 2 hours at 10 a.m. Central. Sometimes I do it at 9 a.m. Central. But, and I look, things happen that kind of get in the way of people making money. I got, there's a lot of tough stuff. Life still happens. When I'm talking about, there's people that have to deal with, deaths and sick people. I got a mother with, dementia that really sidelined me, probably cost me millions of dollars in time. This is the time I've had to spend getting her squared away and the care that I've taken. But, the lucky part for me is that, here I'm in my 50s. And today I'm in my 60s, but in my 50s, when my mom started falling apart, I was able to spend a lot of time to get mom squared away, and my mom was very happy and comfortable. And, thank God I didn't have to split that with a job. In other words, I had the freedom and the time to do what I want to do. And that's one of the biggest benefits of real estate investing and being, being a good investor, making money, is that you have the power to help friends and family and people that you want to help. And that's why I'm enjoying the mentoring so much, is because I'm seeing grown men that really were lost, that were like, man, they could see, once you get about 35 years old, you start to realize, holy shit, $1 million is nothing. $2 million is not even that much. And you realize, I got to take care of myself and maybe your wife, and then you got to take care of, if you got a mother that might need help and care, you got to take care of your parents sometimes if they didn't design their life well and don't have a lot of money. So a lot of burden on men and women out there that are having to take care of parents and children and try to educate their kids and take care of their parents and still have enough left over to take care of them. That's what happens. A lot of people are, by the time they take care of their parents through their 80s, and then the next thing you know, they're in their 60s, and they don't have anything to show for it, So, but anyways, main thing is today's topic, setting the criteria for yourself. You can't ignore the interest rates. You can't ignore that we're going into very, very tough times. And a lot of people are in denial. When you go to, you watch CNBC or you watch the financial channels, you got to remember, the people that are up there speaking, 90% of the time, they're trying to put lipstick on a turd. They're trying to make things look better than they are. And you have to be aware of that, because, if there's people that are selling something are generally lying to you, and, just like me, this business of mentoring and helping people, it's rife with fraud. The guys that claim to have experience, as real estate investors, they have next to no experience. Or what a lot of people don't get is that the target is the YouTube audience, and they fleece them. And I will never do that, and I don't need to do it, because my money comes from real estate and rentals and profits, and so anyways, I'm more akin to collaborating and helping the people that are watching than I am with the YouTube slappers that that just simply cross promote each other's shitty platforms. And I'm not saying that's exclusive to all of them, but certainly a lot of them are terrible. So anyways, and I actually have a video I'm going to share with the class, something I've been playing with. We'll take a look at that. And what's Eric? Hey, Eric, I don't know you, but you should hit that subscribe button, buddy. When do you think the values are going to drop more? They're dropping right now. Listen, I can tell you something a lot of people never talk about, but I do, is stair-step recession. A stair-step recession. And that's what happens. People think, okay, it's just like when things go up, you think, okay, they kind of plateaued and they start to go down. Well, also, we get hit with a, couple, percentage interest rate. Things drop a little bit. Okay, it's leveled out. No, it's getting worse. It keeps getting worse, keeps getting worse. That's why I talk about chapter 27 in my book. If you don't have my book, get my book, Wake Up and Smell the Real Estate. Really important. But you'll see me talk about leapfrogging, getting ahead of the downturn. In other words, if I put something on the market and it's not moving, I jump ahead 3 or 4 months what I think the values are going to be, meaning they're going to be lower, and I price it more consistent with what it's going to be 3 months from now. That way, I get my shit sold today while everybody else is taking turns taking 5, 10,000 or 20,000 a month off. I may have leapfrogged and take 50, 60,000 off, depending on the size of the asset, or maybe a couple 100,000 to get rid of it. And then by the time I'm closing escrow in 3 months, everybody else is finally adjusted their prices down to what mine is that's closing at, and now they're late to the game. They need to jump ahead 3 months from there and keep going down. Anyways, I don't know what you're writing there, Chris. All right. Yep, Chris. Well, when you come back from vacation, there ain't gonna be nothing left. I'm telling you right now. Anyways, just some friendly rivalry with me and one of my students, which is cool. I tell you, I got a guy, Ron, in the class, done really well. He's made about $3 million by his analysis, and he's got 11 kids, and he bought all of his adult kids, probably half of that, the book, Wake Up and Smell the Real Estate, and then he's been in the mentorship, and he's done really, really well, but now his kids are competing with him, and so it's really, really cool, and now, like I say, Chris is one of my students, and now somebody's competing with me now too, which is okay. It's a pleasure, Chris. What else we got here? Rob Johnson. Hey, Tom, are you going in at 60? Listen, Rob, I don't have any. Listen, am I going in at 65% of value? I bought stuff for 20% of what it's worth. If you're in business and you have a good product to sell, and I've had businesses, and people will say, well, how do you figure out what you can sell it for? And it's simple. I sell it for as much as I possibly can and still make everybody happy. Well, and that also goes for how I buy property. I buy it for as little as I possibly can and still have a nice margin of profit. That margin of profit, I might make 50%. I might make 80%. I know that's hard to believe, but I bought properties that were worth 5 times what I paid for them. And my students are doing it now. Some of them, but if you buy something for, half of what it's worth, and it's a $2 million building, you made $1 million. And that's the kind of stuff that can happen. But most of the times, it might be, you make, 30% on, make 30% on a $100,000 deal or $200,000 deal. But when you have deals that are under $100,000, quite often, and Chris will tell you, he's in here. Chris just bought a lot for $105,000, and bought it for $100, put $5,000 in it, sold it for $190. He's going to clear about $75,000, and that's more than he used to make at his previous job. Now he's a full-time investor, and now he's going to make another 75, 80 grand on the house he just locked up, and so he's probably going to make 3 or 4 times, maybe 10 times. That's the beauty of real estate. You don't know what you're going to make. You're going to make more. You're going to make more than than whatever your job was, but you don't know how much more. You might make 10 times more. It's very, very exciting. It's very, very fun. And but back to your thing, my 65%. I don't want to listen. That's what I always shoot for. But will I buy a property for 70 cents on the dollar? Yeah. Will I buy a property sometimes for maybe 80% on the dollar? Maybe. If I think I can close it and sell it immediately and make 20%, make 200 grand on $1 million, sure, I'll buy it 80 cents on the dollar. But I'll be more certain that the smaller that gap gets, the delta between what I pay and what I'm going to sell it for, the smaller that gets, the more sure I am that I have a buyer immediately upon closing. Because then you become a speculator, and I don't believe in speculation. And I'm not saying I haven't done it. I've held properties that have gone up $1 million because I've held them, but I have a different criteria for different properties that I hold. If I have a property that's bringing in hundreds of thousands of dollars a month, and I have several of them, or hundreds of thousands, net $100,000 a year, and I have several of those. I'm not in any rush to sell those And if I do sell, when I do sell a property that brings in, whatever, 100 grand or a couple hundred grand a year, the only reason I would sell that is because I have something bigger and better to roll that money into. So I might trade a property, and I got a good example. I got a property that was bringing in I was netting about 60,000 a year when I bought it, about 90,000 a year when I sold it, and when I sold it for $1.7 million. But that's a property that I bought for $240,000. I made $1 million, more than $1 million on the property. I made $1.5 million on the property. Well, why would you sell such a great property? Tom, it was a great location. Well, because I rolled it into a property twice as big that makes 3 times as much. And that's the criteria for selling and buying is that. And that's what we're going to talk about in the class today. And the new students that are in here, you're going to enjoy watching it. And the new students, I always generally just have you audit the thing and the first class. But I got to get going, so I'm going to have some breakfast. My girlfriend, have a little champagne, and then start the class. In fact, I'm getting a reminder right now on my phone. So FlipAnything USA, hit that subscribe button, hit that like button. If you're new here, this isn't a typical channel. You can see I've got the best and brightest. I don't have the most followers, but it's because I don't, there's not much fluff here. It's all business. So hit that subscribe button, get the book, Wake Up and Smell the Real Estate, and I'll see you members in class shortly. Thanks a lot.